Have you noticed how silver looks calm on the surface, but something feels off underneath? Many investors think the danger has already passed, but one price level, around $22, is quietly flashing a warning that most people ignored. And if that signal turns real, silver could face serious downside pressure. Stay with me until the end, because one key signal coming soon could decide what happens to silver next week. Right now, many silver buyers feel confused. One day prices move up. The next day they drop fast. People ask, is this normal volatility, or is something bigger building? And that question matters more today than ever. Let's start with the $22 level. This price is not random. Many traders watch it because it acts like a psychological floor. Think of it like the ground under your feet. When the ground cracks, people start running for safety. And lately, silver has been getting closer to that ground again. Some investors believe silver is safe because it's a physical metal. They say, I hold real coins, so I'm protected. But price drops still hurt portfolios and retirement plans. Even long-term stackers feel stress when markets turn quickly. And this is where the first warning begins. According to data tracked on investing.com and Kitco.com, silver often becomes very sensitive when the US dollar grows stronger. When the dollar rises, metals can struggle. And recently, the dollar has shown signs of strength again. That creates pressure many investors are not fully prepared for. Now, let's talk about the Fed, the Federal Reserve. Interest rates change how money flows around the world. When rates stay high, investors move toward bonds and cash instead of metals. And many experts believe 2026 could bring another wave of tight money policies. Data from FederalReserve.gov shows how rate decisions directly affect market behavior. When borrowing gets expensive, risk assets slow down. Silver, which depends on both industry and investment demand, can feel double pressure, and that pressure builds quietly before people notice. Here's something many stackers forget. Silver is not only a safe haven like gold, it is also an industrial metal used in electronics and solar panels. That means economic slowdowns can hit silver harder than expected, and recent global growth concerns are raising new questions. Reports discussed on WorldGoldCouncil.com and investing.com show that economic uncertainty can create mixed demand signals. Investors want safety, but factories may slow production. That push and pull creates unstable price swings, and unstable markets are where sudden drops begin. Now think about retirement investors. Many retirees hold silver to protect savings from inflation, but when markets move quickly, fear spreads fast. Some people sell early. Others freeze and wait too long, and both reactions can create bigger price moves. Inflation is another key factor. When inflation rises too fast, people rush into metals. But when inflation slows or interest rates rise, money flows out just as quickly. That sudden shift creates sharp corrections. And recent inflation data has been confusing for many investors. Let's look at futures markets for a moment. CME Group.com provides insight into how big institutions trade silver contracts. When large traders reduce positions, smaller investors often follow, and that chain reaction can accelerate downward momentum. Some viewers ask me, is this market manipulation? It's true that metals markets sometimes move in ways that feel unfair. Large players have more power and information, but the real danger is reacting too late to clear signals, and that delay is exactly what happens before major drops. Think of silver like checking gas prices before a long drive. If you ignore early warning signs, you may pay much more later. Markets work the same way. Small signals today can become big problems tomorrow, and the $22 level is one of those signals. Another factor comes from global central banks. Data shared through BankOfCanada.ca and FederalReserve.gov shows how global policy changes affect currency strength. When currencies shift, metals prices often move in the opposite direction, and global currency stress is quietly rising again. Right now, many investors are stuck between two fears. They fear missing a silver rally, but they also fear a sudden crash. That emotional tension makes people hesitate, and hesitation can be dangerous when markets move quickly. Are you buying silver right now, or waiting for lower prices? Let me know in the comments below. I always like to hear how different investors are thinking, because understanding investor behavior often shows where markets move next. Some analysts believe silver could drop 25 to 35% if strong support breaks. This is not a guarantee. It's a risk scenario based on past price behavior and macro conditions. And risk scenarios are what smart investors prepare for early. I already mentioned official sources like Kitco.com, investing.com, CME Group.com, FederalReserve.gov, WorldGoldCouncil.com, and BankOfCanada.ca. For full details, I've added the official links in the video description. You can visit those websites and verify the information yourself. And when you see the data directly, the bigger picture becomes clearer. Now, let's talk about psychology. Markets don't move only on numbers. They move on fear and confidence. When people believe silver is safe, they stop watching risk signals. And that is often when surprises happen. Many stackers say, "I'm holding forever." That long-term mindset is strong, but even long-term investors need to understand short-term risks. Price swings affect buying opportunities and emotional decisions. And emotional decisions are what markets feed on. Some people believe silver must rise because of industrial demand from solar energy. That demand is real. But demand does not move in a straight line. Economic slowdowns can pause growth temporarily, and temporary pauses can trigger major corrections. Let me ask you another question. Which country are you watching from? Markets react differently depending on local inflation and currency strength. Share your country below so we can compare global perspectives. Because silver is truly a global market. Another overlooked signal comes from bond markets. When bond yields rise, metals often face pressure. Investors choose steady income instead of volatile commodities. And bond yields have been showing signs of life again. Some investors feel overwhelmed by all this information. That's normal. Markets today move faster than ever. News spreads instantly, and reactions happen within minutes. And when everyone reacts at once, prices swing harder. If this video is helping you understand the bigger picture, hit the like button. It helps more investors find simple and honest updates about gold and silver. Because more informed investors make stronger decisions, let's come back to the main question. Is a 35% silver crash guaranteed? No. Markets are never certain. But ignoring warning levels like $22 can leave investors unprepared. And preparation is what separates calm investors from panicked sellers. I'm working on a full video about deeper silver risk signals, and you'll see it right after this one on the end screen. That video will explain long-term stacking strategies during volatile markets, and it connects directly to what we're discussing today. Many retirees tell me they feel stress watching daily price swings. They worked hard for their savings and want protection from inflation. That is completely understandable, and protecting savings starts with understanding risk, not avoiding it. Some traders are watching technical charts closely. When price levels break, automated selling often begins. That can create fast moves that feel sudden to everyday investors. And automated trading has become a powerful force in modern markets. Others believe silver will bounce strongly because physical demand remains strong. Coin sales and bar demand still show interest from long-term buyers, and strong physical demand sometimes slows big crashes. But not always. Remember this simple rule. Markets rarely crash without warning. Small signals appear first. Rising dollar strength, tightening policies, weak industrial growth. And right now, several of those signals are showing up together. For simple gold and silver updates like this, subscribe to the channel. I focus on calm explanations without hype or panic, because informed investors stay calmer during volatile times. Before we finish, here's something important to watch. A new inflation report and the next Federal Reserve decision are coming soon. Those events could push silver towards support or trigger a sudden breakout. And that next move may decide whether the $22 warning becomes reality. Stay alert. Stay calm, and I'll see you in the next update, because the next Fed signal could change everything for silver investors.